Good day. Happy Friday. I hope you guys are doing well and you've had a good trading day. It's Coach Chadwin over here. And yes, I'm live today. Normally, we do this as a recording and we send it out to you as a recording. But I decided to jump on live today as well and just actually show you something as well. So normally on these days, what we do is we do a trade recap. So if one of us have taken a trade, or we want to speak about how we would have entered the trade on a specific day, we do a trade recap. But I'm going to do something slightly different today because I wanted to give value to the group as a whole. And I instead want to talk about something that plagued me once or twice in the last 3 weeks. Something I kind of forgot about during my trading, but I am going to be teaching the students this as a whole. So if you are part of our high-level coaching, I'll be teaching you this as well in terms of gap trading, right? So a lot of traders, you might have heard about trading gaps in the market. And I'm going to show you something unique about those actual gaps. Now, there are high probability gaps, there are low probability gaps. And maybe you've been in a trade, or maybe you were looking at a specific trade and price never came back to the gap. I'm going to show you why that happens. And then maybe you've been in a trade where price did come back to the gap. It was a perfect gap that looked like it was like 100%, and then it failed and went right through and you took a loss on that. So I'm going to try and kind of like bring some clarity around that today. But you are live with me. Please let me know in the chat as well. Always grateful to see you guys live. I know that you guys are not intending to see me live today, so of course it wasn't supposed to be a live, but nevertheless I'm going to show you, then I'll show you live market examples of it as well. So if you are here today, let me know in the chat, and then I'm going to show you what we're going to talk about. Please take notes if you are here, if you're in the KDT Elite, if you're seeing this on YouTube, we're seeing it in one of our Facebook groups, or if you are seeing it in the high-level coaching, wherever you are seeing it, please take notes of this as well, because these things can make a great trade awesome. Welcome, Jennifer. Thank you for jumping on. I got your message on Facebook not so long ago, so thanks for that as well, Jennifer. It's always good to see you. I just got home a couple of minutes ago, so that's why I haven't responded yet. But shout out to everybody who's on stream. I got 5 people with me today, even though you didn't expect me to be live. That's always awesome. So in our curriculum, or in the teaching that I've been doing recently, I've been speaking about gaps, right? Trading the gap. Some call it the FEG, some call it the gap, some call it the market gap, whatever you call it. It's a 3-candle formation, And I'm quickly going to give you a crash course in what makes gaps good and what makes gaps bad. This can be added on a higher time frame and a lower time frame. Then after this, I want you to go ahead and go and look at them and investigate them and see whether or not you see what I'm about to show you, right? So I'm going to be looking to my left because I have another screen set up here, and I'm just going to take you through it real quick. We're not going to be on long. I'm going to make sure that you get some value from this, okay? Let's do this. Oh, trading has gone dark mode on me today. Let me bring it back real quick. I know you can't see my screen just yet. I'll bring it up. Here we go. Awesome. Okay, so if you've ever tried to trade inside of a gap and price hasn't hit it and it's ran away, whether it be on a higher time frame or on a lower time frame, you can let me know in the chat or even in the comments if you're seeing this after the fact. But I'm going to show you why that happens, and then I'm going to show you why certain gaps fail. Okay, so I've just drawn this up a few moments ago. Give me a 7 in the chat if you can see my screen, and don't worry if you can't see the text on top. I will speak to it now as well. So why am I showing you this on a trade recap day? I'm showing you on a trade recap day because one of these formations was the culprit as to why I missed a trade. So instead of me telling you this is the trade I took today, I thought, you know what I'll do today? I'm going to help you not miss the next trade, and I'm going to help you stay out of the wrong trade. If that's good, if you're watching this via replay as well, let me know. Okay, so we got 4 types of gaps on the chart here. The last one is more so extra candles. We'll get to that one. But we'll start at the first one, right? And I've got gap number 1, HP. What I mean by HP, I mean it's high probability. It's high probability that when you're trading this particular gap, price is likely to come back into this area over here, right? Into this area over here, and I'm going to change that color just so it's a bit more clear. Let me do that. You know what? Let's go white. So when you're trading this first one, this is the one we know. It's a 3-candle formation. There's space in between the 2 candles on either side. Thank you, Jen. And when this is how it looks, look at the 3 candles as a whole. And I'm going to tell you that the most important candle in the 3-candle formation is always the 3rd candle. And what that 3rd candle shows you determines how well that gap will perform and what kind of trade you will actually get out of this. So if you have a 3-candle formation that looks like this, in other words, each candle successively going higher, the least important candle in this formation is the first candle, the bottom one. Right? You don't have to worry about that one so much. But if you see that the first candle is going higher, the next candle higher, the next one also higher, of course, the inverse will be true for bearish formation. Price is likely to come back inside of this particular area and give you a strong move out. This is especially powerful if you use a higher time frame, right? And you allow price to come in here on a higher time frame and then move out. Notice that on the top ones, the 3rd candle's body does not go higher than the wick, right? It doesn't go higher than the wick. And when the body doesn't go higher than the wick, this becomes a highly probable trade that price would come back into this area and leave like that, right? So that's high probability. Okay? I'm going to take that off just for clarity. Then number 2, we've got an LP, right? LP. And this will be your expectation. You'll expect that price is going to come into that gap and then trade from there. If you've been taught by me, and you can go and have a look at this on your charts as well. Price will come in there and go there, but that is likely not to happen. Instead, because of how the 3rd candle has formed, and I want to draw your attention to what's actually happening here. And students, I'm going to give you a detailed, high-level students, I'm going to give you a detailed explanation on this with a PDF as well. And we can fractalize it across every time frame, and I'm sure you're going to add some money to your account based on this. Okay? So notice something here in gap number 2. We see that gap number 2 has not closed above the high of the 2nd candle. We have wicked above it, but we haven't closed above it. But the real issue is how deep this retraces. So it wicks above and retraces deep into what was the gap, right? There's still a gap, but the 3rd candle retraces deep. That is a sign of weakness. That's a sign that this gap is likely to fail. So instead of it bouncing off of this area over here, what you're likely going to see is price come back in and run the gap completely. Now, usually there might be another gap sitting at the bottom, and price will run to that gap instead. So when you're selecting which gap price is going to go to, one of the keys that you can do is look at the 3rd candle. If it's quite a deep retracement, it usually means it's going to go to the next gap at the bottom over there. Okay, so that's low probability, LP, low probability. Give me an 8 in the chat if you're still finding value. Don't hide away in the chat. If you're on with me today, please let me know, all right? Thank you, Jen, for always letting me know when you are on. Okay, then number 3, and I'm going to speak about the last one. The last one is the one that made me miss a trade this week. But number 3 is a medium probability. This one's not bad. I trade this one quite often. It's where the 3rd candle is medium. Doesn't mean you don't have to trade it. Medium just means it's less probable. Thank you, Coach Bob. Thank you, Rishan. Then number 1. But medium probability just means there's been a bit of a retracement. However, it's more of a doji candle. It's a consolidation candle. This one, for the most part, I will trade it because it will come in here and then move out as well, right? It will come in here and move out as well. And this has a high probability of retracing back into this area, okay? High probability of retracing back into this area. Now, the last one is the one that you should go and investigate on your charts. Let me just take this off. Okay, thank you for the 8s. Now the last one is where price doesn't come into that gap at all. This is the one that caused me to miss a trade, and instead price tends to come here, right? It comes over here. In other words, it misses the gap completely, and when the new move happens, it starts and just tags in here and leaves. And you'll be wondering what's going on here. Why didn't it come back into here? This is what we call a runaway gap. In other words, it's still high probability because it left the gap, but it never gets filled in. Price trades away from it. And why does it do that? It does that now for multiple reasons. And I'm going to tell you what those reasons are. And you got to look closely to see them. Reason number 1 would be that it likely traded into a SBR over here. And you're probably thinking, oh, but that's easy. I know that one, right? Wait for it. The last one's going to be it's going to blow your mind. Reason number 1 is it likely traded into an SBR over here, right? And so it doesn't need to go down there. Then also it traded into the last 2 candles to the downside. So it also doesn't need to come in here. Right? Doesn't need to fill this gap over here. Oh, what gap? What marking is that? Anyhow, you catch my drift. It also doesn't come into this area, right? But the real important reason, I want you to go and watch this. The biggest one of them all is that important third candle closes with a body above the second candle's high. This is going to blow your mind. And now what you're used to experiencing is this. I'm going to show you. You've seen it before. On your chart, this is what will happen. Let me draw this on. We're focusing on number 3 now. Is you have a series of green candles like that, moving away, and give me a 7 in the chat if you've seen that before. And price never returns to any of those gaps. It just keeps on going, keeps on going, keeps on going, right? And so what can you do in that situation? When the third candle closes above the second candle with a high like that, you can market execute your trade at this top end over here. Market execute your trade there and put your stop there. Why don't you want to put it over here? Well, it can still come back in. It's unlikely it will come back in, but it can still come back in. And then also, you might have a situation where you could even put your stop here. Because since this is a runaway gap, the chances of it coming back is very, very low. You could put your stop there as well. Now, then price will end up doing that, break again like that, keep going, keep going, keep going, keep going. So when you find the price is running away from you, or when it has not retraced back into a gap, the main reason is it closed above the high and it had a opposite candle opposing it on the other side, right? So it trades into this candle, lost the candles to the downside. So this is what will happen. Price will trace here and leave. It will not come back to that particular area, okay? If you found some value in there, please let me know in the chat. Now, what I am going to tell you, Mr. Ninja Nate, welcome. What I'm going to tell you about this particular thing is if you do your due diligence and look at this on an actual higher time frame as well, you'll see when you're waiting for that gap to be filled, why it actually gets missed. Now, let's see if we can see a couple of examples of that. Let me clear this chart. And he is pushing up. I'll give you guys an update on Sunday about what actually happened there. Look at this. I want you to see something. Notice over here. Notice how we do not come back into this gap. Right? And notice how in this one we do. Interesting, right? But look at this one. At this one, we closed above. Sorry, we wicked above with a wick, but did not close above with a body, so we retraced back in. Right? We came in on that one. So here's candle number 1, candle number 2, candle number 3, and we retraced back in. Let me refresh your mind. It's the first one, right? We didn't close with the body. We retrace back in and we leave. Okay? I just realized I wasn't sharing my screen there. Forgive me. Let me recap that again. Look at this. So look at this particular one over here, right? We do not close above, so we retrace back in. There we get that actual point. Bam, it hits. Okay? Then we close with the body above on the third candle. 1, 2, 3. And what happens? We leave that gap open. It's a runaway gap. Okay? And then we get our third one. This one doesn't break it fully, doesn't come fully down because it still has a big open gap over here. So we'll see this one more so like this one over here. Gap number 3. Right? What happens? Price comes in and leaves it. So that one's good. Similarly over here, leaves us with a doji candle, kind of like a doji small candle at the end. And what happens? Price comes back into that gap and trades away. Okay? You're starting to see something now. What about this gap, coach? Why does it leave it open? Why does it never trade into there? Well, it's because it's closed with a body above that. Give me a 9 in the chat if you're finding some value here. Let me know. Let me know. Okay, we're almost done. So you see what I'm saying? The way it closes determines whether or not it will be left open or if price will continue higher. Then, let me give you the last one. Let me find the last one real quick. Oh, here's the other one, by the way. You guys still with me? I'm getting no 9s in the chat. Here's the other one. Look at the deep retracement, right? And what happens? Price runs the gap completely. So we don't want to take those ones. And then I'm going to give you the last one. Let me find an example of that. Where price trades back into... Oh, here's one. As well. We see we got that candle. We see we have a gap over here. I'm going to replay the chart so you can see it before it actually eventually comes back. See how price leaves this gap open over here? And the reason it does that is this area over here that overlap with the gap. Price trades, leaves the gap open, and then moves away. So, using this on a higher time frame can give you clarity as to how far price will retrace, how deep it will retrace, and whether or not it will turn around completely and break the overall area. So study your gaps. Gaps in the market is an indication of volatility entering, right? So you don't need a volatility indicator or volume indicator. This shows you real life volume. And then also it's an indication of where price will move from or where price will leave open. So study your runaway gaps. We all know this one, high probability one. Study this one that causes it to fail. This is especially true on your lower time frame as well. And then study this one over here as well, which is your medium one. So at the end of the week, this is what I wanted to give you guys. Instead of giving you a trade recap, I thought this week I am going to show you how I missed the trade and then how you can capitalize on this as well. If you go over your charts, you're going to see this time and time again. How do I do this? How do I study this? I've told the students time and time again, when I'm looking at gaps, when I'm looking at anything, I circle hundreds of them and I study them in depth. This is something I found in my notes. When I missed the trade, it reminded me about a note I had, went and found the note and then saw this and drew it up for you guys. You guys be blessed on purpose. Have a good weekend. Spend some time with the family. Remember, as always, practice, practice, practice. It's been a blessing to be on with you guys, KDT Elite, as well as our high-level students. You guys be blessed on purpose. Thank you, everybody. You guys be blessed. Thank you for joining today. And if you're watching this via replay as well, you guys be blessed, okay? mindset, multiplication, and management